Hi, everyone. Welcome to Real Estate Trends 2021, What You Need to Know Legally. I am interior designer Cathy Hobbs. I own Cathy Hobbs Design Recipes, which is an interior design and home staging company based in New York City. But before that, I was a newscaster, mostly in New York. And welcome to this very special panel, which I promise will be information packed. And the guest today is Jeffrey Moerdler. He is a member of the law firm Mintz, Levin, Cohn, Ferris, Glovsky, and Popeo PC. He also heads the real estate and communication practices for the New York City office. Jeffrey, welcome.
Thank you. Good morning.
I want to start off with kind of the state of the state, so to speak, as it relates to the commercial and real estate landscape for commercial and retail landlords. Essentially, are we seeing landlords being able to retain tenants and also lure tenants? What are we seeing right now? We do see a lot more activity in New York, but really, what does it mean for them?
So you have to first separate it by different market segments. Office and retail are entirely different. In office space world, yes, landlords are being able to retain tenants and even attract new tenants. There is an increased vacancy rate. There's increased sublet space on the market. But I'll use my law firm as an example. The New York office, we lease 87,000 square feet at 3rd Avenue and 42nd Street. Our New York office lease is up in a year and a half. Pre-COVID, we started looking for 85 to 100,000 square feet in that same Grand Central area. We have restarted our search. We continue to look for 85 to 100,000 square feet. My firm is in growth mode. Other law firms have laid people off and are contracting. There are pluses and minuses in the market and a lot of nervousness on the office side. So lots of tenants, if they have leases coming up shortly, are looking for 1 or 2 year extensions to see what happens with their business. On the retail side, very different. There were issues in retail in Manhattan in particular, I think in large part caused by overpricing in the market over the last 5 years, particularly for sort of high street retail, 5th Avenue, Madison Avenue, 57th Street. And you add COVID and business stopping in retail for most types of tenants. And then also what has been going on in the last few years with the Amazon factor of people not necessarily using retail as much, although I think that the impact is overblown in the media. Retail is a different situation. A lot of retail vacancies, a lot of problems retaining tenants, especially at the pre-COVID pricing. There's going to be a significant drop. There already is in retail pricing.
Let's go back really quickly to the commercial office, owner, landlord, owner. As far as offices are concerned, there are still many businesses that have not returned to full capacity or at all as it relates to going back to the office. If I am a tenant, am I able to really capitalize on a renewal, renegotiation of my terms?
So absolutely. I'm expecting that as a result of COVID, my law firm in our search for either renewal in our existing space or new space is going to benefit significantly from that. Timing is everything. We're lucky. We're in the right spot at the right time. But any tenants that have leases coming up in the next few years can take advantage of that, because landlords will love to lock them in early, and doing an early renewal now while landlords are nervous, even if your lease isn't expiring in the next 2 years, if it's in 3 to 5 years and you're willing to renew early, I think you can negotiate a great economic deal. And that's good for both the landlords and the tenants. It's a reduced rent likely, but it's going to give stability to the landlord and the tenant.
Let's talk about some opportunities, though. There was a news story just last week on NPR in which they were featuring the state of commercial leasing as it related to San Francisco, and how they had seen a number of tech companies downsize. Dropbox was one in particular that they profiled, but they said that it was an opportunity for certain businesses that simply cannot operate remotely. They mentioned the medical field, biotech. Are these some potential opportunities as far as people who will be able to fill those slots, fill those office spaces?
There will
I know that that's your
absolutely be opportunities, and it's not just for, it applies to all types of tenants. I think this is going to be a transitional period. I hate to compare it, but from a market perspective, the closest analogy is to what happened to downtown Manhattan after 9/11. It was a ghost town for a few months. People came back. Leases were renewed, but many tenants took the opportunity to upgrade and move to higher quality space, either downtown or in Midtown. What happens is the tenants in the B+, A- buildings can get space at the same or a lower price in a A building, a higher quality building or a better location. The Bs move up, the Cs move up. The problem in the market is with the C buildings. Those buildings are going to have trouble. And I think we'll see, similar to what we saw after 9/11 in downtown Manhattan, C buildings being in trouble and having to convert to other uses. So in Lower Manhattan, they converted to residential. I think we'll see some of that in Midtown. We'll also see, and are already starting to see, transitions in hotels. There has been a glut of hotel space in New York City, and many hotels have fallen on very hard times as a result of COVID. And I expect to see many of the borderline hotels converted to other uses, be it residential or healthcare related facilities, all sorts of opportunities there too.
You brought up 2 points relating to the 9/11 analogy, and I want to kind of expand upon that. First, you mentioned the opportunities as far as people upsizing and things like that. I do know, because I remember I was a reporter at Channel 11 at the time, that there were incentives, both given by the city and the landlords, to incentivize people to move back downtown. Do you see there needing to be, a government intervention to really revitalize the commercial market?
So I absolutely expect, and we are starting to see already from the property owners, those kinds of incentives: more free rent, more work they'll do, lower base rent, although they're trying hard to maintain the base rent. And I think there's a good likelihood we will see government economic incentives, but the problem is it's harder to give government incentives right now because all the government authorities have their own financial troubles. So I think we'll see some, but it's going to be harder. And the hardest part is going to be dealing with real estate taxes, because that's a major way for the city to raise money. And because of valuations going down, the assessed values of the properties will go down, and they either have to raise the tax rates or do something to just maintain the same income to support city services. So I'm not certain about the government benefits, but I think we'll see some. But definitely landlords are already very sensitive to the issue.
The other point that you raised, as far as essentially reevaluating the asset. Maybe this isn't going to be an office anymore. Maybe this will be, as you mentioned, a health facility. We have seen that outside of New York City, where, there have been kind of the pillaging of the mall that's happened nationally. I've seen it. I've seen malls converted into healthcare facilities and things like that. If I am a large, commercial office owner, should I be reevaluating how this space, will be used? And if so, what are my opportunities? What are my choices?
So I think that goes back to the discussion earlier about the quality of the building. The higher end buildings, I think, will have a revenue issue because rents are going to go down and incentives they give to the tenants are going to go up. But they're going to make it as long as they have a good, solid owner with a good, reasonable financial footing. I think it's the weaker locations and qualities of building that are going to have trouble. And I think many of them are already reevaluating. I'm working right now on 2 different transactions involving closed hotels where it's an opportunity for someone to acquire them. I'm representing someone who's looking at taking over those hotels, and they're viewing it differently. They're not in the New York market. This is their opportunity to break into the New York market and get a higher quality product than they might otherwise get at a lower price. So there are definitely opportunities out there. This is no different than the multitude of other difficult economic times that I've lived through in my career. And out of adversity comes opportunity. If people are ready for the opportunity and are liquid and have foresight and are willing to take a little risk, I think there's huge long-term opportunity in real estate.
When you mention hotels, to me, that's not that big of a stretch to convert a hotel to condominiums. As the owner of a staging company, I'm seeing the trades, constantly. That to me, I can picture that. I see that as an.
I actually think from a construction perspective, it's a little harder because hotels are laid out very differently.
True.
Than a residential. The distance between the windows and the corridor is much narrower. The layouts of where the piping for bathrooms are, so it can be more challenging.
Where I was going with that though is, I can see that in the hotel sector. But what about the retail space? I was in, the Mecca just yesterday, along Madison Avenue, large national companies that have shuttered their doors. You go to Soho, the Lower East Side, even you see the retail stores papered. They've closed down. What's going to happen to those spaces?
I think it's an opportunity also for new retailers or retailers that aren't in Soho or Midtown Manhattan to grab a space, and owners are going to have to take a gamble on companies that aren't a Fortune 1000 retailer. But it's an opportunity for those businesses, no different than office space is an opportunity for somebody who's running a business out of their home or their garage now to go lease office space at better pricing. You have also a big opportunity, which can be challenging, but again, is an opportunity with the co-working spaces that have shut down. WeWork is consolidating, many others. There's all opportunities there. We're going to go through a period of reevaluation for the next 1, 2, 3 years during which those opportunities exist. But by the end of that period, I think it's going to turn around. I'm very bullish on New York City.
Well, speaking of being bullish on New York City, a lot of people are saying that, it's going to be the fall, that's going to be the starting gate, that people are going to get prepared and they're going to kind of incubate for the summer, and then they're going to be back to work in the fall. Do you have that same prediction?
I'm there. My office has been formally closed for almost 13 months. Right now, our announced reopening date is July 4th, after July 4th. Personally,
what does that mean? What is that reopening going to mean for your office? Is it going to be full capacity? What is that?
I don't think we know yet. That's evolving. I think it will, since in a law firm, many of us have individual private offices. I think there'll be precautions taken in terms of the portions of our space that are open plan where our assistants sit and paralegals and others. But I expect eventually most of the office will be back in. Will I be back in the office 5 days a week? Not so sure about that. Will I be back at least 3 or 4 days a week? Absolutely. I can do my work from home. I can't do the social part of it, working with my team, training new people, networking. I'm not out for breakfast, lunch, and coffee my usual 5 to 10 times a week. I also feel very bad I'm not supporting the businesses in Midtown Manhattan by being out on those social occasions.
Or even getting lunch every day, right? Even something as simple as, something as simple as that. I mean, that was supporting a local business.
Right, absolutely. Zoom and WebEx and all the video services are great, but they're not as good as in-person contact from my perspective. And I think many businesses will realize they need that in-person and social connection.
Let's talk about technology. I mean, that really is kind of your, you are a very well versed on the communications sector. Everyone knows what Zoom is now, but let's talk, forward thinking. What are some perhaps technology mechanisms that people need to have in place going forward when people start to return to work?
So I think there was a huge disparity across the market last March. Some companies, not just law firms, just were not set up for what happened in a 48-hour period. My law firm, we have about 550 lawyers and 1,300 employees total. And we went from an average of 50 to 100 remote users at any given time. In a 48-hour period, we went to 1,000 remote users. And my firm was pretty well set up for that worst case scenario. Maybe not for that many. We were certainly set up and had planned for sort of 500 remote users in an emergency. It took us 24 or 48 hours, but it's been seamless since then. A lot of other businesses weren't that well prepared and didn't have the technology in place. And it took them weeks and months to get back up and running. And that was a serious problem for them. I think this has accelerated people's understanding and appreciation for technology and how it impacts business, and that it is really mission critical to the operation of the business. And a piece of my practice is things like data center, cellular, fiber optics, in building wireless systems to help companies operate. They're thriving in this market because people now realize they need much more redundancy and much more capacity and need to be prepared for that worst case scenario. That's with us to stay. Even after the immediate short-term crisis ends, companies will never forget this experience.
Well, I wanted to ask you, in layman's terms, kind of what that meant for you, so that if there is a company out there that really needs to continue their ramp up, what did it mean to take your law office of your size remote? What did you actually need to do?
So I had a home office set up for many years, but I didn't have a webcam on my computer. I got a webcam. I had it on my laptop, but not on my desktop. We had a hodgepodge of things going around our firm. Some people were pretty well set up. Others really weren't at all and didn't have good Wi-Fi or a fiber connection or a cable connection at home. Didn't necessarily have a laptop with high quality Wi-Fi service on it. People realized that they weren't prepared in many situations. That led to a run. There was a shortage of laptop computers about a year ago. You couldn't get one. Same thing with webcams. I wanted to get that webcam for my desktop. Took me a month to get it because of shortages. This has been an eye-opening experience, and I expect to see in how companies look at their both operations and the real estate. It has changed over the last 10 years that having good fiber connectivity, having redundant fiber, having good cellular service within your office building, having good equipment at home and a good mobile setup, awareness of that has increased, but this exponentially increased it. That's all going to be a part. I would see sort of 10% of the time or 5% of the time in office leasing negotiations, a company asking about and raising fiber and cellular and connectivity as issues in a term sheet or in evaluating buildings. I think that's going to dramatically change, and you're going to see that in 80% of the companies nowadays.
Well, let's transition to the tenant side then, because I think that those are all valid points. What should the level of expectation be for a tenant? What should they be asking for beyond, potentially rent concessions, as far as the level of expectation for what that build out should be for them, especially across the board, even including technology?
So it's not just how you build out your space, but it's the bones of the building. Does your building have multiple redundant fiber carriers, both in the basement and up to your individual floors? Is that connectivity already there, or do you need to bring it in the building? Do they have a diversity of fiber providers, 10, 15 of them, not one or two? Do they have diverse redundant riser shafts in the building? I did a project on the GM building in Manhattan a couple of years ago, and we discovered they did not have redundant telecommunications pathways going up to the individual floors. If you had a fire in the phone closet on the second floor, it would knock out all your phone and fiber service to the entire building. Since then, they built a second set of pathways, and they now have a redundant set of pathways up to every floor in the building. I've done many transactions involving what's known as DAS, distributed antenna or in-building wireless systems, providing multiple cellular carriers with high quality distributed antenna service throughout a building or a shopping center or a transportation hub, so that all the carriers have good service everywhere in the building. If you walk in most office buildings or shopping centers or elsewhere to the center, you lose your cell phone signal, especially when you get in the elevator. That shouldn't happen. If you're walking around and going to somebody else's office and taking your laptop with you, you don't want your signal dropped. Those are all things companies now need to look at and incorporate in both their evaluation of buildings when they're looking to lease space or to buy a building, and to their individual build out. The bones have to be there, or you can't really do it in your own space.
Let's talk about opportunities again, whether it's on the purchase side. There have been various instances where companies have located just outside of New York, let's say, Weehawken, for an example, or Jersey City, Hoboken, even Stamford, Connecticut, because they were getting different incentives that they didn't have, in New York. Do you think that we may see some companies that may have looked at those locations or other locations now saying, let's reevaluate New York City because of the vacancies and the opportunities?
Exactly. There are going to be vacancies and opportunities in the Jersey Gold Coast, Weehawken, Jersey City, et cetera. But now the gap may be narrowing, and this may make New York City a little more competitive in filling some of those vacancies. Hard to tell. New York City, unfortunately, has not been quite as aggressive as surrounding communities in offering incentives to retain and attract companies. Yes, it was absolutely done in downtown Manhattan after 9/11, but they haven't done it elsewhere. And hopefully the city government will wake up. I think a major issue in that is going to be our mayoral election coming up. Who's going to be the next mayor of New York, and how are they going to deal with this? And are they going to be business friendly and real estate friendly?
You had mentioned kind of that that difference between that, if not divide, between that commercial owner and the retail owner. I think that there's so much retail in Manhattan, and a lot of it is tied to tourism, people coming to New York to shop, and so many various factors that fuel that retail economy. You mentioned that people are using mail order, they're shopping in different ways. Where are we headed as far as retail? Some of these businesses may not come back. So what are the opportunities there?
I think it's going to be a difficult time for retail in the next few years, but the volume of people in New York City is still so high, and our percentage of retail is not as high as many other cities. We have less retail per capita and per square foot than many other cities. I think there's going to be a huge repricing of retail. And a difficult time for retail landlords in the short term. But I think retail will fill up, and it'll create all these opportunities for new kinds of retail businesses that don't exist today. New technology-oriented retail operations. I don't know what to expect, but it's going to be an opportunity for what we aren't expecting today.
Before the pandemic, you mentioned earlier, the shared working spaces. That was so popular on trend, but those are spaces that were designed in a different way. I know a couple of offices. For example, Hulu. I know I have friends who work at Hulu, and they actually had to redo a lot of their offices because so many were shared workspaces. There's going to be a lot of reconfiguration, especially from the open floor plans that were potentially designed on intentionally that they're now going to have to reevaluate.
I think we don't know how that's going to work yet. I think this will evolve over the next 12 months. I think we need to see what happens with herd immunity and the vaccines, and with the mutations, and are we able to deal with this by an annual equivalent of a flu shot? And that's my personal expectation or hope at this point. And if that's the case, then over time, people will become more comfortable and will come back to working in closer quarters. A number of investment banks and trading firms have spaced people out, or left every other trading station empty, or put up lucite dividers. I think precautions are being taken. We're learning how to deal with it. And that's an evolving situation. But you're right, there may need to be a reevaluation and reconstruction of some spaces. But I don't expect my law firm to take less space because we need it to operate and we need to be in Manhattan. And I think that's true for a ton of other businesses.
Jeffrey Moerdler, if you were to sum it up, where we are now and where we are headed, what would you say?
I think we're in a difficult transitional period right now, and we don't know exactly how and when this will play out. But the bottom line is, New Yorkers, real estate owners, the US and the world in general, people rebound, and we will figure this out, I believe. And I think real estate in New York is absolutely here to stay, and will survive the short-term difficulties and rebound.
Very well said, everyone. You have been Watching Real Estate Trends 2021, What You Need to Know Legally. I'm Cathy Hobbs, and we were joined by Jeffrey Moerdler, member of law firm of Mintz, Levin, Cohn, Ferris, Glovsky, and Popeo. And Jeffrey is also the head of real estate and communications practices in New York City for the firm. Thank you so much. So much to talk about. We covered quite a bit today, right?
Thank you very much. This was terrific. Thank you, Cathy, for doing a great job, and Anthony for setting this up and giving me the opportunity.
Thank you, Jeffrey. Jeffrey, you guys are great. It was very informative. Cathy, you're the best. You're really good. That's why I got you moderating my panel as well.
I enjoyed it as always.
Yeah, and Jeffrey, you're a superstar. You're my #1 attorney in New York City. Oh, anyway, guys, I definitely want to thank you. We'll be back in about 10 minutes. And we're going to be talking about your brand, marketing your brand. I think we all need help in marketing our brand. So that should be very interesting. Once again, I want to thank everybody. There will be a thank you note going out with Jeffrey's information as well as Cathy's information. So if you have any questions, I know that there's a whole bunch of you guys that registered. We'll get a thank you letter, and please allow us a week to get out this video as well, so you can share it amongst your associate and friends. Once again, thank you, Jeffrey. Thank you, Cathy. Take care,
Thanks,
everybody.
everyone. Have a great day.
You too. Bye-bye, guys. Thank you,
Bye,
guys.
Jeffrey. Thank you.
Bye-bye.